Hello and welcome to TMP Direct's Open Enrollment webinar for October 1st, 2016. My name is Brandy Thompson and I am with Employee Benefit Consulting Group, or EBCG. We came out last June and presented some new benefits to you, and we had mentioned to you at that time that we would be reintroducing some benefits upon SP Express's October 1st, 2016 open enrollment period. So you now have a second opportunity to make changes to your plans this year. We're going to be talking about those things today, as well as some other products. So let's go over the agenda. So we're going to be talking about open enrollment and what that means, qualifying events. Some of this information is going to be familiar to you as we've gone through it a few months ago when we came out in June to your office. We're going to be talking about what's new, so some changes that have been offered to everyone beginning October 1st. There's a couple new products and a new plan option for you. We're going to be going through some benefit package review, going through those changes, as well as some changes that we've made to the non-medical side. So you currently have some products through MetLife as well as the standard for your life insurance, and we're going to be merging all of those products to MetLife directly, so we'll talk through those as well. And then finally, we're just going to go over the enrollment process itself and some important dates for you to remember as you begin to make your decisions for plan changes for the upcoming plan year. So now is your open enrollment time. You are able to make any changes by add or deleting dependents, changing coverage, making any plan changes. Again, you were able to do this in June, but now we are reintroducing that as this is the true open enrollment period for SP Express and TMP combined. So all the changes that are going to be offered, or excuse me, all the benefit changes that are going to be offered to you today are going to take effect on October 1st. Now is the open enrollment period. We ask that any forms turned into Human Resources or Daisy no later than September 21st. So very important date for you to remember, and we'll recap that as we go through the presentation at the end as well. All right, so anytime outside your open enrollment period that you want to make changes, the only time you're able to do that is if you do have a qualifying event. So just as a reminder, the qualifying events include marriage, birth of a child, an adoption of a child, divorce, eligibility of Medicare or Medicaid, or a change of employment for you and your spouse. Perhaps your spouse has lost employment or their benefits aren't as affordable as the plans through TMP. So in the event that that happens, you have a special open enrollment period just for yourself and your family that you can make changes to the plans that are offered to you today, as well as add or delete any dependents. So if you do have a qualifying event throughout the year, you have to report it within 31 days of the event date in order for Human Resources to have the appropriate time to add. It would be retroactive to that specific date. So if you get married on October 16th, you have until November 17th to provide Human Resources with that information so that that change can be made. If we do not make that change within the 31 days, you're outside of that window, and we are locked out from making those changes. Therefore, your COBRA rights could be lost. So it's real important that we make those changes within the 31-day period. So any full-time employee working 30 or more hours per week are eligible for all the coverages that we're going to be talking about today. Legal spouses, domestic partners, both same and opposite sex with an affidavit are also welcome to join the plan. Dependent children up to the age of 26, regardless of marriage or job status. So if you do have a child that is married and has a full-time job, but perhaps that insurance is a little bit too costly for them, or the benefits aren't as great as yours, you are able to keep them on your plan until the end of the month of the age that they turn 26. Anyone that's newly hired, benefits begin on the first of the month following 60 days of employment for you. So what's new today? So the two things that we're going to be talking about that are new are telemedicine services at no cost and an employee assistance program at no cost. So for all employees, regardless of whether or not you are choosing benefits, if you are eligible for benefits and are considered a full-time employee working 30 or more hours per week, you will automatically receive a new program or two new programs available to you. One is telemedicine and one is employee assistance. We're going to be talking about those in the next slides to come. So there is a rate change and plan option change for you with United Healthcare on the medical side. We are keeping the 3 plans that we offered to you back in June, but we'll be introducing a 4th plan for you to choose from. Your dental insurance is going to be with MetLife, and we are going to have a decrease in those rates as well as 2 different plan options to choose from. You currently have vision coverage through VSP, and that actually is going to be changing over to iMed. You are going to have only one option, where before you did have 2 different options. We will have one option for you, but that option is going to be cheaper than both of the options provided to you previously. Your disability insurance as well as your life insurance is also going to be through MetLife. Right now you have your life insurance through the standard, and that is going to be changing over to MetLife effective October 1st as well. All right, so the brand new product that we're going to be offering to all employees at no cost to you is called a telemedicine product through a company called Healthiest You. Healthiest You is a very large telemedicine company. You may have heard of the company called Teladoc. Teladoc has partnered with Healthiest You, and they are a very large telemedicine company that affords employees the opportunity to have a consultation, either video chat or phone chat, with a primary care provider 24 hours a day, 7 days a week, to treat any minor but common issues that you may have. So an example of that would be perhaps your allergies are acting up for you or your children. Perhaps you know that you have a sinus infection and you just need a very simple antibiotic to treat that. You just have some general questions about your health that has come up. This will be an opportunity for you to be able to speak with the doctor for no cost to you whatsoever. If you are calling regarding your child, you will be able to receive a call directly from a pediatrician that is used to treating children. Or if you are calling about you or your spouse or an adult dependent, you have the availability to speak with a primary care doctor regarding all of those needs. So again, you have the option of doing a video chat or a phone chat, whatever you choose. There is also an option that if the provider needs to see something, perhaps maybe you have a skin rash that the doctor needs to look at, you can take pictures of that, whatever the ailment is, and upload it into a private server through Healthiest You. The doctor can look at what that is if it isn't through a video chat. So there are other options for you to be able to have a face-to-face or send pictures for a consultation with a provider. Now, there is no cost to you. This does not access your medical plan whatsoever. However, if the provider is going to prescribe a medication for you, you can choose to have that cycle through your medical plan's prescription drug program so that you're getting that copayment, or it's reducing your deductible if you have an HSA qualified plan, or what we call Plan 3 currently. So if you do have the need to speak with a provider, you could call several times a month, and there would be no cost for any time that you do speak to a provider. The only cost that would be given to you is in the event that there is a prescription needed. If there is a prescription, perhaps an antibiotic for a sinus infection, your doctor can call that into the pharmacy of your choice. They actually submit that either via phone or through electronic prescription, and that goes directly to your pharmacy of choice, and hopefully your pharmacy already has your medical information where they can actually cycle that through your prescription drug program. So when you're ready to go to the pharmacy, it's all available and ready to go for you. Now, you will receive a welcome kit in the mail. This slide indicates that everyone who is eligible for benefits will be receiving a welcome kit for them, their spouse, and dependents. You are able to call Healthiest You anytime after October 1st and access this opportunity. It is also comes with, as you can see at the bottom of the slide, the availability to shop prescriptions or shop any procedures that perhaps you may need. So within their website, or they have a mobile app as well, you can plug in the type of service that you need or a prescription and look in your area to see what is the cheapest price for you. So this would work really well for those that are on Plan 3 or the HSA high deductible plan, because obviously the more out-of-pocket that you're saving is going to be better off for you. So on top of calling a provider, you have a lot of these different products available to you as well, built into the Healthiest You offering that we're offering to you today. So you will receive a welcome kit in the mail that will give you a little ID card. It is not necessary to keep that ID card to utilize the plan. It's just a really good reference tool, maybe to keep in your wallet, or to maybe perhaps put on your refrigerator, but it will provide you with the phone number and all of the information that you need for Healthiest You. The next program that we're going to be talking about is the Employee Assistance Program. This is available also for all benefit eligible employees. Anyone who is eligible for benefits will automatically receive this program as well. So this is afforded to you, your spouse, in the event that's related to counseling, work-life balance, legal or financial advice. You can call this number listed here 24 hours a day, 7 days a week for you, your spouse, or dependents, and get access to these types of services. This is 100% confidential. There is a protection that is built into the HIPAA privacy laws to the government that does not allow TMP nor EBCG or anyone else to access anyone calling the service or the reasons that they're calling the service. So please know that this is confidential and available to you anytime that you need it. They also handle crisis management in the event that something critical happens in your life. Please give them a call and they will help you immediately. It's a really great service, and again, it's free of charge on behalf of your employer. So now we're going to go into the medical benefits there. We won't spend too much time on the 3 different plan options, as we just spoke about them a couple months ago for you, but we will go through them quickly. And then we're going to talk about the 4th plan option that's available to you. So Plan 1, again, was available back in June when we came out to introduce these products to you. All 4 plans that we're going to be talking about today have prevention services covered at no cost to you. So if you have your routine physicals done, ladies, we get our OBGYN visit as well as our routine physical. Everything, as long as it's billed as preventive, is going to be covered at 100% with no out-of-pocket cost to you. On Plan 1, you have an office visit copayment of either $30 for a primary care provider, which would be a pediatrician or family medicine, general medicine doctor. Anyone that isn't a primary care provider would have a $60 copay for specialists. This particular program has a 4-tier copayment structure for prescriptions, all based on price. So your cheaper medications are going to fall in that $15 category. $35, $65, or the more expensive $100 category would be our very expensive medications. Perhaps autoimmune medications or self-injectables would be part of that $100 copayment. Routine labs and x-rays are at no cost to you, making sure that you're always staying in network. You would not have an out-of-pocket cost for that. Urgent care or emergency room is going to be a $75 copay or $250 copay respectively. Now again, we do have the Healthiest You product available for anyone that is part of the TMP family. So anytime that you have the need to perhaps go to the emergency room or urgent care and it's something that you think is minor enough that a Healthiest You provider can help you out with, you're obviously going to be saving a lot of money by trying to call Healthiest You first to see whether or not they can help you. But if not, and you need to go to an emergency room or urgent care, you do have copays available to you for those services. So on this plan, there's a $1,500 single deductible or $3,000 family deductible. In the event that you do have family coverage, not one person in your family is going to exceed more than the single deductible of $1,500, while the rest of the family will begin to contribute into the $3,000 family deductible. But you will max at $1,500 individually if you do have only single coverage, or $1,500 if you have family coverage for one member, but collectively you would have to meet a $3,000 family deductible. That is calendar year. So deductibles and out-of-pockets run on a calendar year basis, so January 1st through December 31st. There is a coinsurance on this plan after deductible for anything that does not have a copay tied to it. So the copays that we discussed earlier, there is no deductible that applies and no coinsurance. But in the event that you have perhaps an inpatient hospital stay or an outpatient surgery, that's when your deductible and your coinsurance would kick in. Coinsurance is otherwise known as cost share. So after your deductible's been met, United Healthcare services, and you pay 30% of the services until you reach an out-of-pocket maximum. The out-of-pocket maximum listed here in the bottom bullet is $6,000 for single coverage or $12,000 for family coverage. Now, your out-of-pocket maximum includes everything that we've talked about. So any co-payments for your office visit, prescriptions, emergency room, etc., any deductible and any 30% coinsurance applies and reduces your out-of-pocket maximum. In one calendar year, you will not exceed more than $6,000 for single coverage or $12,000 for family coverage. Once you've met your out-of-pocket maximum for the calendar year, for the rest of the calendar year, any services rendered, even if they are prescriptions, you will have zero out-of-pocket costs as long as you stay in network. So Plan 2 works the exact same way. It's a PPO plan. There is no out-of-pocket for preventive services or routine labs and x-rays. Your office visits are increasing to $35 or $70 for primary care specialists. Your prescription drug copayments have stayed the same from Plan 1 to Plan 2, as well as your urgent care and emergency room copayments. You do have a deductible that's a little bit higher than Plan 1, $5,000 for single, $10,000 for family. After your deductible's been met for those services that do not have a copayment tied to them, you do not have a coinsurance on this plan. So after deductible, you have 100% coverage by United Healthcare, and then your out-of-pocket maximum is also equal to your deductible of $5,000 or $10,000. However, again, as a reminder, the out-of-pocket maximums include any coinsurance, any deductible or any copayments that you have on the plan. So you may exceed or meet that out-of-pocket maximum of $5,000 or $10,000 just in copayments alone. That could be possible. But you do have a deductible as well, but you will not exceed more than $5,000 or $10,000 in any one calendar year. Plan 3 is the high deductible health plan, or what we call the HSA qualified plan. This is what we introduced to you back in June. It works a little bit differently than your Plan 1 or Plan 2 traditional PPOs. You do have preventive services at no cost, as we've mentioned before, but this particular plan works a little bit differently. Your deductible here on this plan is $2,600 for single coverage or $5,000 for family coverage. There are no copayments on this plan. Everything that you have would apply towards the deductible first. After your deductible has been met, either single or family, you pay prescription copayments of $10, $35, or $60, depending on the medication, and 20% coinsurance for anything else. Once your $2,600 deductible and 20% coinsurance and copayments meet an out-of-pocket maximum of $3,500 for single or $7,000 for family, then the rest of the calendar year, the eligible expenses are paid at 100%, just as the other two plans work. Your out-of-pocket costs become a little less in Plan 3, even though you have that full deductible to meet first. If you look at the aggregate out-of-pocket cost on this plan, it is cheaper than Plan 1 or Plan 2 because your deductible is lower and your out-of-pocket is lower as well. So this could be a good plan for you to choose depending on your own situation. Now the new plan that we're offering works the same as Plan 3. So Plan 4 is brand new, effective October 1st. It's going to be offered to you as a fourth plan option. You are able to choose this if you want. It works the same way as Plan 3. It is a high deductible health plan or an HSA qualified benefit plan. The deductible is a little bit higher, so it's $3,000 for single or $6,000 for family. After deductible, you do have the prescriptions for copayments, or excuse me, copayments for prescriptions, and you also have a 10% coinsurance. Plan 3 had no coinsurance. You have a 10% coinsurance on this particular plan. and your out-of-pocket maximum is $6,000 for single or $12,000 for family. So your out-of-pocket costs are a little bit higher on Plan 4, but still cheaper than Plan 1 or Plan 2. So Plan 3 and Plan 4 are, as we mentioned, a HSA qualified plan. What that means is it's a high deductible health plan, but per the IRS qualifies you to be able to have an option to open up a health savings account. This is completely optional. You do not have to take part in this portion of it, but because you're on Plan 3 or Plan 4, you have the option to open up a health savings account. What a health savings account is the availability to have a checking account that is tax sheltered. So you are able to put tax-free dollars from your paycheck into an HSA, or a health savings account, to help offset the costs that you have out of pocket for deductible and out-of-pocket maximums on Plan 3 or Plan 4. So this example that we're showing you in this slide is UHC Plan 3. You have preventive care, again, covered at 100%, but your plan deductible is $2,600 for single for Plan 3 or $5,000 for family. On the right side of this slide, it shows Part 2, which is the other component, is being able to open up an HSA account. In 2016, the maximum that you can put away tax-free into this account is $3,350 for single or $6,750 for family, which, as you can see, compared to the deductible on the left side, it is a little bit more. So you're able to tuck away more tax-free dollars than even what your deductible would account for. So you are able to use this anytime that you need to help offset costs for medical coverage as well as dental and vision. So maximum coverages are going to be increasing for, maximum contributions increasing for the single side for 2017. It's going to go up from $3,350 up to $3,400 for single coverage, while family coverage contribution maximums have remained the same. If you are 55 and older and not eligible for Medicare, you are able to put in an additional $1,000 in catch-up contributions on top of the maximums that we show here. So you're able to open and contribute into an HSA if you meet these requirements. This is all deemed by the IRS and governed through the Section 125 Code of the IRS. So you can open and contribute an HSA if you are covered by a qualified plan. So Plan 3 and Plan 4 is considered qualified plans. You are not covered by any other health plan that is not an HDHP or qualified plan. You cannot be entitled to Medicare, TRICARE. So if you are able to take part in Plan 3 or Plan 4, but you cannot open an HSA account. If you've not received VA benefits within the past 3 months, you're not claimed as a dependent on someone else's tax return, and you're not covered by a healthcare FSA unless it's a limited purpose FSA. If you have a limited purpose FSA, you can take part in the Health Savings Account program. So if you enroll in the Health Savings Account program, HDHP, and want to open a health savings account, this allows you to put pre-tax dollars into an account, as we mentioned, that will help you offset those out-of-pocket costs related to your medical plan, in addition your prescription drug plan, any dental or vision expenses as well that aren't considered cosmetic. You can use these funds for your entire family's expenses, even if they are not on the high deductible health plan. You can use this for Medicare, COBRA, or long-term care premiums under certain circumstances. And most importantly, these funds never leave you. So they roll over from year to year to year. So if you don't use them in 2016, whatever you put away will roll over and apply. So you can use it in 2017 and so forth. And you can choose how much you contribute into your HSA account. It is not governed or mandated a certain amount that is contributed into your HSA. You could put $5 in every pay period. You could put $100 in every pay period. The only thing that's governed are the maximum amounts that we talked about in a couple of slides before. So the per pay cost slide here, we're not going to spend much time in. I do understand that there's going to be an addendum given to you with respect to employee costs. So just know that there are going to be employee costs per plan and going to be pre-tax, just like we had mentioned back in June. But you will see for the TMP employees an addendum to this employee cost here. All right, moving on to dental. We do have two options provided to you through MetLife dental product. There is going to be a high dental plan and a low dental plan option, so two different price points to choose from. You can choose any dentist and have savings in network just as you're used to now. You will also have diagnostic and preventive care, so your routine checkups will be no out-of-pocket costs. It's all paid at 100%. You do have a calendar year deductible on either plan of either $50 or $150 for individual or family, respectively. Any basic services are going to be paid at 80% after deductible, and any major services, these are our more painful procedures, perhaps a crown or an inlay or an onlay, is going to be covered at 50% after deductible. And the high plan gives you a choice of a $1,750 annual max and a low plan of choice of $1,250 in annual maximum benefit. There is orthodontia coverage at 50% up to a lifetime maximum of $1,250, and that is on the high plan only. So if your child is already in the midst of treatment, this new MetLife plan, the high plan, will actually look to see how much has been paid out in orthodontia benefits and reduce your $1,250 by that amount. So it is a lifetime maximum, and it does coordinate with your previous plan. So again, here's a pay per employee cost here. So any per pay costs are listed, and again, they're different for the high plan and the low plan. I do understand there could be an addendum to this, so please don't pay too much attention to these rates, but just know you're going to have 4 different categories where before you only had 3. You had employee-only category, employee plus 1 dependent, or then family coverage. Right now, we're splitting it out into your traditional 4 tiers, just like your medical coverage. Employee-only, employee plus spouse, employee plus child or children is going to be 1 category, and then full family coverage, which includes your spouse and children, in the 4th category here. So your vision program is through IMED. We are going to be only offering 1 plan. VSP was offering 2 plans for all TMP employees, and we've moved just to 1 particular plan. You can choose any vision care provider. More importantly, stay within the network, though, because within the network is going to give you the opportunity to stretch your benefit dollars a great deal longer. Your exams are once every 12 months at $10, and your materials are covered at a $25 copay. Your frames are allowed once every 12 months up to a $130 allowance. So if your frames cost $150, the first $130 is going to be paid for by IMED, and then you'd have a $20 balance there. Lenses are once every 12 months, either contact lenses or lenses that go inside your glasses. You can get single, bifocal, trifocal lenses. If you do need progressive lenses, they result in a higher copayment. So depending on the type of lens that you need that is progressive, there are different copayment structures. You can find that inside your benefit summary that will be given to you. Contacts are up to $130 allowance as well. So whether or not you get daily wear or extended wear, there will be a $130 allowance every 12 months for your contact lenses. So the nice thing to point out here on the right side, IMED has a very large network of private practitioners as well as retail chains. So you will have a regular access to private practitioner vision service providers. But in addition to that, you also have access to be in network if you go to any one of these retail chains. So JCPenney, Target, Sears, LensCrafters, Pearl, Nationwide Vision, all part of IMED network. So just as a reminder, just as your regular VS2 plans that you currently have, any out-of-network services require the full payment up front and reimbursed on the back end by IMED. But I will caution you that any reimbursement on the out-of-network side is going to be very, very low. So make sure that you're staying in networks so you can get that full discount as well as the lower out-of-pocket costs on your vision care. So here's the per pay employee cost for you. I understand that this is going to remain the same for TMP employees as well. So your old plan, you can see the plan rates there in white, and your new plan rates are going to be sitting over on the left. So your premiums have decreased by moving over to IMED, as well as in the bottom showing that your rates are guaranteed until October 1st, 2020. So these rates are locked in for 4 straight years. You will not see any sort of rate change on the vision coverage at all for the next 4 years. So employee-only coverage, as you can see, is going to be $2.54, and family coverage showing as $9.36 with the other 2 tiers following. Just like your dental coverage, your VSP coverage right now is a 3-tier program. This is moving to a 4-tier program. So now we're moving on to the disability coverage. So short-term disability coverage is available for all full-time eligible employees to purchase who reside outside of the state of New Jersey, New York, and California. If you reside in the states of New Jersey, New York, and California, you have state-mandated disability benefits afforded to you that will be paid out in the event of your disability. If you are not in those states, you have the availability to purchase short-term disability coverage. You can purchase it in increments of $50 up to 60% of your pre-disability earnings or your salary, or $1,000 per week to a maximum of 25 weeks. Long-term disability coverage is provided at no cost to all full-time employees on behalf of TMP. Once you're disabled on long-term disability for 180 days, your LTD benefit would kick in and cover 60% of your earnings up to $5,000 per month. You also have life insurance available to you through MetLife. This was or currently is through the standard, and effective October 1st, it's going to be changed over to MetLife. All employees automatically receive a flat $30,000 benefit with a matching accidental death and dismemberment benefit. So any employee through TMP would receive a flat $30,000 life insurance benefit for their beneficiary in the event of their death. If their death results in due to an accident or an accidental reason, your beneficiary would receive a $30,000 life insurance benefit and then an additional $30,000 accidental death and dismemberment benefit. If you are in an accident that results in the loss of a limb or hearing or eyesight, that is a dismemberment portion of your benefit, and you could receive a benefit paid out to you even if you do survive. So dependent on what that loss is, there is a schedule built into your life insurance that will account for that. So this policy includes an accelerated death benefit, which means in the event that you're diagnosed with a terminal illness and you have a certain period of time given to you by your doctor, you have the availability to receive a portion of your benefit up front prior to your death to help account for any expenses that you have, or maybe if you want to take a nice vacation. Whatever you'd like, it's available to you in an accelerated time prior to your death. You also have the right to convert this policy. In the event that you ever leave TMP, you can convert this policy to a whole life policy. It is a bit more pricey, but it would be directly through MetLife, but in guaranteed policy issued to you, but converted to a whole life policy that builds cash value. So just as a reminder, if you have a life change throughout the year, please make sure that you update your beneficiary designation. Part of the MetLife form that you will be completing as a result of this open enrollment will ask for a beneficiary designation. We want to make sure that we have the most up-to-date information on file as we have life changes throughout the year. We get married, we get divorced, we have children. We want to make sure that TMP is honoring, in the event of your death, that they're filing the life claim for you. They have to provide the insurance company with the most recent beneficiary designation. So if you don't know who that is, or throughout the year you have changes, please make sure that you're updating your beneficiary as well. So supplemental life is also available to you now from the standard, moving over to MetLife effective October 1st. If you do have coverage currently, we will automatically grandfather that coverage from whatever you've chosen with the standard over to MetLife, but you do have a special open enrollment opportunity with a guarantee issue in the event that you waived that coverage previously or you want to increase that coverage. So this option is employee paid, coming out of your paycheck on a post-tax basis. You have the option to choose life insurance for you, and if you choose it for yourself as the employee, you also can choose it for your spouse and dependents. But you have to choose it for yourself in order for your spouse and dependents to receive life insurance as well. This policy is also convertible and portable. So if you want to convert it to a whole life policy in the event that you leave the company, you can do that. Or you can port it out and keep the same type of term life insurance that this is offering you through the supplemental life program here. Making sure that you realize that premium deductions are after tax, both on any short-term disability deductions and life insurance deductions here, so that your benefit that you receive or your beneficiary receives is tax-free. So depending on the type of coverage that you choose, rates are going to vary by the choice of your benefit as well as your age. Let's talk a little bit about that. So up at the top, the first grid here is $10,000 increments to a maximum of 5 times your pay or $500,000. This is what an employee can choose. So you can choose $10,000, $20,000, $50,000, all the way up to $500,000 or 5 times your salary, but you have a minimum benefit of $10,000. So medical evidence level of $100,000. This is also known as guarantee issue. If you choose life insurance, you can choose up to $100,000 with no questions asked as the employee. There were no medical questions that need to be filled out, no exams that need to be taken. If you do choose and benefit up and above $100,000, that's when you may have to go through an evidence of insurability or a medical exam to make sure that you're healthy enough to be insured. That will be approved by underwriting. So if you do choose $150,000, you would automatically get $100,000. The other $50,000 would have to go through underwriting approval. There is no age reduction on this policy. MetLife does not have any age reduction. So typically with the term life policy, it starts to decrease as you age, the face value that you've chosen in the beginning of the policy period. This particular policy that we're offering to you today does not have any sort of age reduction at all. This is a different benefit than what was offered to you through the standard. Waiver of premium is also built into this policy, so in the event that you become disabled prior to the age of 60, up until the age of 65, if you are deemed disabled, the premium cost for this particular policy is waived and you're able to keep this policy until the age of 65. Conversion and portability are included, as we talked about, and the accelerated benefit option is also available in this policy as well. So beneath that little grid is the spouse and children benefit. So spouses are able to choose up to 50% of what the employee has chosen not to max out, or excuse me, to max of $100,000. So they can choose an increment of $5,000 to a maximum of $100,000, but not to exceed the amount that you've chosen as the employee. Their guarantee issue or medical evidence level is $25,000, where the employee is $100,000. Children benefit, you can choose an increment of $1,000 all the way up to $10,000 worth of coverage. Children can stay a dependent child life insurance policy up to the age of 26, as long as they're a full-time student. The full $10,000 is considered medical guaranteed, so they're a guarantee issue for the full face amount for the children. So over on the right-hand side, you're going to see the rates page. It's going to show you the rate grids based on your age and the amount of coverage that you choose. Whether or not you're an employee or a spouse, you're going to go by employee age. So if the employee is 35 and the spouse is 55, that spouse is going to use the employee rate table of 35 to 39. So the child rate is below that. It's 24 cents for every $1,000 of coverage. This is per child unit or per family unit. So whether or not you're taking the life insurance, $10,000 life insurance policy out for one child or 5 children, it's still only going to be a flat 24 cents. There wouldn't be 24 cents per child. It would just be a flat amount. So we gave you an example at the bottom here. A 45-year-old employee chooses $100,000 worth of coverage. Here's how we calculate that premium. So we take $100,000 divided by 1,000, because that's the rate that you see at the top here is for $1,000 of coverage. So that gives you 100 units of coverage. So you look at your category 45 to 49. It's 0.197, so 19.7 cents for every $1,000. So since I'm choosing $100,000 of coverage, I would take that rate times 100 and come up with a monthly premium of $19.70. That's how much it would cost me as a 45-year-old if I chose $100,000 worth of coverage. So just to recap the enrollment process here, Colonial is currently available for TMP members. We're going to continue to offer those supplemental coverages. Employees who want to make changes to their elections for these offerings must do so prior to October 1st. So make sure that if you are wanting to change any sort of Colonial coverages that you have currently, that you do so by the end of the month, or at least submit it by the 21st of September. So any elections or changes, any forms that you fill out that we're requiring you to fill out today and turn in no later than the 21st will become effective on October 1st. MetLife and IMED form required for enrollment in coverages from all benefit-eligible employees. So even though some of these coverages are employer paid, we have to make sure that we have an enrollment form on file for you. So please make sure that you complete the MetLife and IMED enrollment form and turn it into Human Resources or DAISY no later than September 21st. For medical coverage, if you do not complete a new enrollment form, we will enroll you or continue to roll you over in the plan that you're in. So let's say you chose Employee Plus Child coverage in Plan 1. If we don't get an enrollment form from you, we will automatically continue that same coverage for you effective October 1st. But if you do want to make a change or change perhaps to family coverage or change over to Plan 4, you absolutely need to complete a UHC enrollment form so that we can capture that change and make that change for you in the UHC system. So please make sure all the forms that we're talking about are turned in to Human Resources no later than September 21st. This is a very important date for you all to remember. We want to make sure that we get you in the system as soon as humanly possible, and by doing that and making a deadline of the 21st, we'll hopefully have everyone in the system ready to go by October 1st. So thank you very much for taking the time out to listen to this webinar today. If you have any questions specific to your own situation that we have not addressed in the webinar today, please reach out to Human Resources, and they can reach out to me or someone on the EBCG team, and we will make sure that we address all of your questions. And throughout the year, if you have any questions about the benefits or claims, the way that they were paid, make a claim appeal, EBCG is here for you or your spouses or children throughout the year as well. So please don't hesitate to reach out to Human Resources, and we will be more than happy to assist with any sort of issues or questions that you have throughout the year as well. Thank you very much for taking the time to listen to this webinar today, and have a great day.